Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 17th of December. I'm Daniel Lam, your host for the podcast. There was a series of data that came out of the US overnight that got delayed by the government shutdown. We had the October and November employment data, and they were weak overall. Non-farm payrolls rose by 64,000 in November after falling 105,000 in October, and a net negative 33,000 revision for September. So that means the 3-month average is at 22,000. Education and health services comprise most of the job gains, while there was minimal growth in cyclical sectors after contracting in October. Unemployment rose to 4.6% from 4.4% in September, and wage growth slowed to 3.5% year over year from 3.8%. Moreover, there was a mixed picture in the October US retail sales. Headline sales were flat, down from a downwardly revised 0.1% month-on-month in September, and below the 0.1% expected number. This data is consistent with the picture of a slowing but not collapsing economy. Consumption spending has been weakening in line with weaker consumer sentiment throughout the year. Now, it is logical that spending would converge to slower employment. Hiring is subdued, consistent with this low hiring and low firing environment. These data keeps the door open for further Fed easing. Job growth is modest and also subject to large revisions, and private sector momentum is weak. The Fed's unemployment dot at 4.5% for 2025 versus the newest unemployment data at 4.6% means that any further deceleration would warrant more easing than priced. Risky assets started off mildly negative as the numbers came out and gradually recovered throughout the day. The DXY found good support just below the 98 level, while US 10-year Treasury yield had been plateauing at the 4.2% mark. The S&P 500 is still holding firm around 6,800, while gold is hovering around 4,300. The attention is now going to move to the ECB tomorrow evening, where we do not expect any changes, while there's likely to be some mild tightening in Bank of Japan's monetary policy this Friday. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.